Microsoft stock just sold off 6.5% after reporting earnings. And personally, I think this is a huge opportunity. I am buying more. While the market is freaking out about high Capex spend and the potential of an AI bubble, they're completely missing the hidden signal in this earnings report that makes the Microsoft investment case stronger than ever. In this video, I'm going to break down the Q2 earnings report for Microsoft, explain why the market is wrong to sell off Microsoft stock here, and ultimately share my investment thesis for Microsoft.
The following reflects the opinions of a man who spends far too much time thinking about stocks. Please do your own research before making any investment decisions. Nothing in this video is personal financial advice. Continue at your own risk.
So let's dive right into the data. As we can see here, I just loaded in the cash flow statements for Microsoft stock. And the number one thing that everyone is worried about with this AI bubble is the massive amount of spending and whether or not there's going to be a return on it. You can see here that capital expenditures have exploded at Microsoft, and it just hit an all-time high in the latest quarter. They spent $29.8 billion. That's why it's negative here. And in their Q2 during the prior year, that was $15.8 billion. So they had a $14 billion increase in capital expenditures year over year. Now that seems insane, especially if you're one of the people that's more dubious about AI, you think it's a bubble, you don't think the returns are going to be there. Then in your view, if you're an investor, you think Microsoft's throwing the cash away. Now, the other big negative that's being talked about among investors when it relates to Microsoft is their ownership stake in OpenAI. Microsoft owns about 27% of the company, and because the company is deeply unprofitable, Microsoft actually took $7.5 billion in GAAP losses. Another negative being brought up is potential job loss in the future and slowing seat growth at Microsoft 365, and I will address all of these concerns. And frankly, I'm glad they're abundant among investors because I think it's creating a big opportunity in Microsoft stock. First off, let's just address OpenAI. Microsoft owns 27% of them. Current valuation, well over $500 billion. So in terms of equity value, that is significantly more than Microsoft is taking in losses. And a big chunk of those losses at OpenAI is being paid to cloud providers, which that money is going to Microsoft because Azure is one of their largest providers. And you have people very negative on OpenAI. You have people positive on OpenAI. The reality is it's probably going to IPO sometime in the next few years and probably at a $1 trillion valuation. So these quarterly losses in GAAP net income that Microsoft is taking, it's going to be peanuts relative to the return that OpenAI has. So depending on how you look at it, that is a potential positive for Microsoft, far more than it's a negative. Now, this isn't an OpenAI video. I could give you my thesis on that in a different stock analysis video, maybe when they go public. Now, the main negative here with Microsoft is this massive CapEx spending and how it's exploding nearly at $30 billion a quarter. And the big question is whether or not they will get a return on that. I'll give you a financial reason and showing how Microsoft is still extremely profitable, and they are doing this investment from a position of strength. They have a great balance sheet, great cash flow, and frankly, Microsoft hasn't had something this intelligent to invest in quite a long time, if ever, really. But first, we really need to talk about the big picture here. Microsoft is not burning cash. They are building capacity. They are building data centers. They are acquiring and setting up and getting running large instances of GPUs. They call them token factories. We'll talk about that more in a second, along with their diversified array of other data center infrastructure offerings, which is also expanding. As Microsoft clearly said in their latest earnings call, AI demand still far exceeds the current supply. And I think that's going to be the case for the indefinite future. They literally cannot build data centers fast enough. Microsoft Azure revenue grew 38% year over year in the quarter. That's based on constant currency. And the company just hit an all-time high in total remaining performance obligations, RPOs, that hit $631 billion in the quarter. This is future money contracted to Microsoft, mostly in cloud. Companies are booking out these GPUs, and this is going to continue. I will get to the financials of Microsoft Azure growth and everything, and their overall cloud business. But first, I just want to set the right mental model. When people are talking about AI, a lot of the times they just think of chatbots because that's what they're introduced to. They're thinking about ChatGPT. Most people, they're only exposed to the free plans of this stuff, but that really is just one form factor. And I think over the long run, it's going to seem pretty basic and novel, and that's not what most AI is going to be used for in the future. So you have to stop thinking about it as chatbots. The right mental model is to think of it as digital intelligence. We are literally starting to manufacture intelligence. And companies like Microsoft, they're starting the industrialization of that process. So the term that's used often is tokens. They're producing tokens of intelligence. And Microsoft is building token factories. They are manufacturing intelligence. It can be used in countless different applications, not just answering questions in chatbots or producing images. There are hundreds of different applications it's being used for right now, and the future direction is getting very interesting. So you really just have to click that in your brain of what the value is that's being provided here. You're manufacturing intelligence. It can be applied in so many different use cases. It will become increasingly more autonomous, and these systems will interact with each other. Well, now there is not a limiting factor around a human being and a human body and population growth. We have created artificial intelligence. This is going to be a massive industry. It's going to change probably all of human civilization over 10, 20, 30, 50 years. Similar to the internet, it's going to seem slow every single year, although it's actually not that slow if you're in it. It's hard to even keep up. But as we look back over 20 years, it's going to eat up a large part of the economy. It's going to be everywhere. It's going to be in the background, constantly operating. And when I'm analyzing a stock like Microsoft, I don't think they're going to win it all, but I think they're in a position to capture a large part of that value creation. And even a small slice of that pie is going to be a great business. They have the infrastructure side with the cloud services, and then I think they are also going to play a big role in both enterprise and consumer software in applying that intelligence in useful, productive ways in businesses and personal human being lives. And the current Microsoft 365 bundle of apps, that's going to be their big into the enterprise. And the consumer versions of that, plus Windows and the whole desktop ecosystem, which has like 1 billion users, that whole operating system, that's going to be an operating system for artificial intelligence in the future. So as we look at Microsoft's business, a big part of it is their cloud revenue. This is basically the entire thing if you're looking at it. You can disregard video games, you can disregard Bing, you can disregard pretty much everything else. Hardware, devices, Windows operating system, those are all useful things, but it's all about Microsoft cloud revenue. That includes Microsoft Azure. It also includes their Microsoft 365 bundle of apps in enterprise and consumer. The quarterly revenue for that segment just exceeded $51.5 billion in the latest quarter. And over the past 5 years, that has grown from $19.5 billion a quarter to over $50 billion a quarter. And this is going to keep growing. Cloud revenue was up 26% year over year. This is a huge growth business within Microsoft. And of that, Microsoft Azure is their largest business, and it's also their fastest growing business. Microsoft Azure grew 38% year over year in constant currency. This growth has accelerated over the past 2 years. And if I remember correctly, back in 2022, growth was in the mid 20%. And since the AI booms, it went into 30% year over year, and now up to 39 and 38% year over year. I also just listened to their earnings call, and Microsoft said that if they wanted to, they could juice this number into the mid 40%, but they take away some of the potential revenue so that they can supply AI for their own Microsoft 365 Copilot, for GitHub Copilot. If you don't know, Microsoft owns GitHub. That's huge in software. It's the #1 code repository in the world, incredibly valuable to software, the whole ecosystem. They also own VS Code, very popular editor that pretty much all editors are built off of. They also use Azure to host their own 365 applications. So Microsoft could actually make more money in that business segment if they just contracted out to other businesses. But all of those are also part of Microsoft Cloud. And we'll talk about more of the software side of the business later in the video. But right now, let's just focus on Azure and the infrastructure side of the business. These large data centers they operate, they're basically factories for producing intelligence and useful applications. Historically, it's been data centers and web hosting and machine learning models and all these various products, a bunch of stuff. Countless things, to be honest, way too much to even mention. And now a new one is producing these intelligence tokens. And it's fairly obvious to me that Microsoft is going to be one of the largest providers of this in the future. They already are. And that is going to be a significant growth industry. The models keep becoming increasingly more intelligent. They become cheaper and more abundant, which there's a thing called Jevons paradox, where it's the cheaper something becomes, the more it gets used. And if you just think of it from first principles, digital intelligence, if we could somehow print and create more human intelligence, I think we've defined things to do with it that would be productive. So I think we're going to end up in a world where there is far more digital intelligence than human intelligence, and that's going to get pretty interesting. The other big advantage that I think Microsoft has as we talk about these big cloud providers, the same is true with Google Cloud and AWS as well. I think those are all going to do well. But the big advantage is that they already have this deep infrastructure across all of cloud hosting. They don't just do AI. They do databases, machine learning, compute, basically everything you need to run all of modern compute infrastructure. And that's going to be incredibly useful for AI in the future to have all of this abundant, because as they become more autonomous, and we're already seeing this with tool use and early innings of agentic use, AI is going to be using all of these other things, creating software, creating applications that need all of these other hostings. And it's going to be this recursive loop that's a huge growth just in computing infrastructure. We are going to have far more software in the future than we do today. We're going to have far more data in the future than we have today. We're going to need far more storage in the future than we need today. So I think no matter what way you crack it, this is going to be a growth business. And this is just the beginning of my bull thesis on Microsoft. I will be doing a full stock analysis on it. I will also be talking about the software side of the business, which is viewed as a negative by many, but I think will actually increase in value over time, and they'll be able to monetize it even better. More on that in a bit. But first, I just want to talk about how I am excited to be buying more Microsoft stock, and I am hoping that it sells off even more than that 6%. It's going to go right back to about where the price was a week ago, and I loaded up then. I bought around $5,000 of Microsoft stock. Actually, I bought it in 2 accounts, so it was around $12,000. And that was down around 18% from its all-time high in stock price, despite the fundamentals of the business being the best they've ever been and on a clear track to growth. And the reason why I was able to buy so heavily during this dip is because I've been building up a cash position. I haven't bought Microsoft in a while, so when it was an attractive price that I thought was a fair value in the market relative to other options, I loaded up. And this is something we don't talk enough about with investing. You need to have a cash position, but also you don't want that cash just earning nothing in a checking or typical savings accounts, which the yield is basically nothing on it. So you should probably look into having a high yield savings account. I found this great tool called Bankrate, which compares all of these different high yield savings accounts. Some of them are as high as 4%. And over the span of a year, the difference between 4% and 0% or 0.1%, that's a huge difference. On $50,000, that's $2,000 a year more. So if you want to check out this tool and find a great savings account, the link is in the description and pinned comment of the video. Make sure to click that so they know we sent you. And these are legit companies too, and they're much higher than what you would get at Bank of America or Chase, which is 0.01%. So it's something to consider. And then at a minimum, you just want to keep up with inflation and ideally beat it. So again, the link is in the description and pinned comment to get access to this whole tool so that you can find a great high yield savings account for your cash position. All right, now back to Microsoft stock. Before I go into the financials and my stock analysis part, let's talk about the other big part of Microsoft Cloud, which is their software side of the business, Microsoft 365. Now on the top line, they saw commercial cloud revenue grow 17% year over year and 14% in constant currency. And their 365 consumer cloud revenue increased 29% year over year, up 27% in constant currency. And what's happening here is that they're massively increasing their average revenue per user. Because as we dive into this, I'll talk about another negative overhanging on Microsoft stock related to this business. And that's this number right here, Microsoft 365 commercial seat growth. Back in the pandemic, that was 20% year over year. So as companies are getting more and more employees, they're expanding. That was a big thing in software as a service, land and expand. People add seats, they hire more employees. And a lot of these software plans and enterprises, they're by seat, the contracts. However, hiring slowed down massively in 2022. We got layoffs, and really it's kind of just stayed flat since then. And especially with this new AI wave, everyone's thinking everything will be automated, less job growth, and maybe less jobs in the future. So that's a big narrative going on right now. In the latest quarter, Microsoft 365 commercial seat growth, it's still positive. It's 6% year over year, but this has gone down. In the past 2.5 years, it's gone from 10% to 6%. However, the actual revenue growth is still much higher in the mid-teens, 14% year over year in the latest quarter. And the reason is because they're increasing their average revenue per subscriber. And that's due to the new AI features integrated into these products. They actually charge more to have Microsoft Copilot be able to do more advanced AI things within the Microsoft 365 apps, Docs, Excel, Outlook, Teams, that whole bundle of services. All of those are getting much better with AI integrated into the products. You also have Microsoft 365 Copilot, which is their chatbot-based tool. It has a pretty good amount of usage considering it has very bad word of mouth and it's not necessarily popular among consumers at the moment, but it does run most of the best models and it has the distribution of the Microsoft ecosystem. So the narrative going on right now in most software and in Microsoft when it comes to seat contraction, less growth, and worry about job loss in the future, that's viewed as a negative on Microsoft's software side of the business. However, what's not being factored in is the actual opportunity with AI. These products are becoming much better. The value they can provide is increasing massively, especially when we're talking about to enterprises and businesses. So Microsoft is charging more for some of these services. They're capturing some of that value creation. So the average revenue per user is going up. However, there is worry around the seat pricing model and how that will evolve in the decades to come. And eventually you might not be charging necessarily based on a per user, per employee basis. So I think there's an underspoken about bull case here for Microsoft being one of the AI tools that is used within enterprises. And this ends up being a growth business for them. Let's not forget that the Microsoft bundle of applications, Microsoft 365, just a few years ago, pre-AI, was considered to be potentially monopolistic because they were able to launch a new service in the bundle like Microsoft Teams and crush other products like Slack in terms of distribution. People were saying those were anti-competitive tactics. They have huge lock-in as well, especially with enterprise. So I do think this is an underrated part of Microsoft's business. And that is not even talking about where this all is going, because the copilots and the chatbots, that's not where AI is going to be 10, 20, 30 years from now. When we're talking about digital intelligence, we're talking about digital employees. And Microsoft is heading that direction. They're in early innings right now. They're introducing Microsoft Agent 365. These are agents you can use in your business. They're going to be able to use all of these different tools, both from Microsoft and in the entire software ecosystem. And I think Microsoft is in a very strong position to capture a large part of that enterprise application AI space. And in my opinion, where this AI things are really going is the idea of digital employees. Humans and AI working together, AI autonomously doing tasks, having tool use, file access, able to operate its own computers. If you're in the AI space, there was a huge announcement this past week with Claudebot just got renamed, not from Anthropic, an open source project, but it is insane. And we are in the very early innings of this agentic computer use control. And that's where this is all going long term. And the value creation that is possible with digital employees, I don't even know if there is necessarily a ceiling on it. Now, there definitely will be competition. But again, this is a huge growing pie. To be successful and make a lot of money, Microsoft only needs to capture a slice of it. And I think it's underrated, Microsoft's position, considering they already sell into the enterprise. Everyone's already in their ecosystem. A lot of these computers are already on their operating systems. It only makes sense they capture part of that market. So I'm pretty bullish on every single part of Microsoft Cloud. And I think that will be seeing double digit, probably 20+% growth every single year for a decade at least. By the way, if you're wondering how I got all this data so quickly into Excel, it's from a new product at dividenddata.com. It's the Dividend Data spreadsheet. It integrates into Google Sheets and Microsoft Excel. And you can call basically 30+ years of financial data, everything we have access to on our terminal, which I've been using throughout the video. We have a bunch of custom functions that let you call different kinds of data. Incredibly customizable. We also have this sidebar with quick actions over here where you can instantly paste in data, and it's really fast. It's absurd actually how fast it is. Look at that. And it formats it all really quickly. That's 30+ years of financial data straight in your spreadsheet. I mean, just look at how fast you can get this data. I mean, to do this manually, it might take days and you have to keep it updated forever. It saves you countless time. And right now this is available in early access to dividenddata.com members. You can already start using Google Sheets. I am finishing the Microsoft Excel implementation, 99% done, and it's ready for submission. And let me tell you what, guys, I am excited. So if you want early access, now is a great time to join, and you can lock in a discounted price and keep that price for life. We're doing an early access sale where you can get 50% off annual membership to dividenddata.com. You get that research tool I was showing throughout, plus the spreadsheet tool to get access to our data in spreadsheets. If you want the early access sale, the link is in the description and pinned comment of the video. So I already tried to give you the big picture of my thesis around Microsoft. Let's go over some of the financials, and I'll specifically mention what happened in the latest quarter as well. So they just had their Q2 2026, because they're on a little bit of an accelerated fiscal calendar, and that came in at $4.14 for non-GAAP earnings per share in the quarter, which was actually more than Q1, which is usually higher than their Q2 if we go and look historically. As an example, last year that was lower than Q1. And the year prior to that, it was lower than Q1, and the same pretty much all in the past 5 years. That goes to show how significant the growth at Microsoft really is, where they're growing quarter over quarter, even down quarters are still above. And this quarter did beat expectations. So at a minimum, if we don't grow, we're going to exceed $16 in earnings per share in fiscal 2026, which is what analysts are expecting. And that would give it a 29p ratio before selling off. But realistically, I think they might hit 17 to 17.5 earnings per share for the full year, because the first 2 quarters were already above 4. And analysts are projecting pretty high earnings per share growth in the coming years for Microsoft. And to be honest, I think these are very achievable and they might surpass it. And it's interesting because Microsoft's a big company. They have a $3.5 trillion valuation. And people look at that number and they say, how much more can it grow? But I'm telling you right now, guys, the world's going to get weird over 10, 20, 30, 40 years. We're going to have a $10 trillion company. We're going to have a $25 trillion company. We're going to have a $50 trillion company. We're going to have a $100 trillion company. Now, whether or not that's Microsoft, I don't know. But they're valued this way because they have an incredible market position. It's dominant. They generate tons of cash. It's also reliable subscription revenue, a lot of it. So in my opinion, it makes sense. And I think they're a great business trading at a fair valuation. More on that later. But first, let's just talk about the cash. Last year, they generated $281 billion in revenue. That was $136 billion in cash from operations. So that's what the business generated. And then in Capex last year, they spent just under $65 billion. That's all going to this huge data center build out. Free cash flow came in at $71 billion for the quarter. So even with all of that Capex spending, they're still making over $70 billion in free cash flow. And they're redistributing that to shareholders via dividends. And they also just have a fortress balance sheet. We'll talk about that in a bit. So here we can see a visualization of Microsoft's revenue per share growth over time. 5-year compound annual growth rate, 15%. The growth on this company is fantastic with how consistent it is. And again, that has to do with their subscription-based revenue and their consistent growth. And free cash flow, despite all of the massive spending, it's still close to or hitting all-time highs. The quarter before this, they hit an all-time high in free cash flow per share. In fact, if we dive into that, that was $26 billion in that quarter. This quarter looks bad at only $5.9 billion of free cash flow. And again, that might be a number that was contributing to the sell-off here because it's their weakest quarter. But that's the point I'm going to make, is that every single year, this is their weakest quarter. And if we just look at the last quarter, they hit all-time highs in free cash flow. And we talked about the Capex earlier in the video. They're just investing into fund their future growth. It's incredibly intelligent. They're not being stupid about it. If they could be way more risky if they wanted to. Some would argue that they're being conservative with their AI build out, because the company, they've been generating cash forever. They still generate a ton of cash. Their balance sheet is great. Over $390 billion in shareholder equity. So far more assets than liabilities. They have $89.4 billion in cash and short-term equivalents, way more cash than debt. Their net debt is negative $31.8 billion. And as I mentioned earlier, this company generates so much cash flow that they return some up to shareholders via dividends while they're still investing in growth. So I think this is a great total return stock. Microsoft's dividend, it's a low yield, 0.76%. That's because they trade at a higher multiple and they only pay out around a third of their free cash flow as a dividend. Based on net income, that's 23%. They pay a dividend every quarter and they've been increasing it every single year for decades. The 5-year compound annual growth rate of the dividend is 10.2%. And basically every single increase is 10%. And it's always in a very sustainable payout ratio. So as I'm looking at Microsoft in Dividend Data Terminal, the financials, they just pop off the screen. It's pretty high quality. I do think Microsoft is a great business at a fair valuation. It's not dirt cheap, but it makes sense. The company is going to grow. If we take a look at the forward P ratio for Microsoft, so the price every single day based on what they're projected to make in earnings next year, the forward-looking P ratio with the Microsoft sell-off that's going to happen as I'm recording this video. So basically at the price it was last week when I was buying, the forward P ratio is 27. That seems pretty reasonable for a company you think is going to compound earnings at 15 to 20% a year at least for probably the next decade. You can say that with pretty reasonable certainty. That seems like a fair valuation. And based on historic multiples over the past 5 years, it's definitely on the lower end. It's below average. There are times where Microsoft's trading at 33, 35 times forward earnings. And I think Microsoft actually deserves a slight re-rating into a higher multiple, but you really don't need it because they're just going to grow their earnings per share 15 to 20%. And there, if they have the same multiple, stock price is going to go up 15 to 20%. So I'm using this sell-off after Microsoft earnings as a buying opportunity. I will be buying more tomorrow, and I'm hoping it sells off even more than the 6 to 7% it was doing after hours. Now, with that said, this is my personal opinion, and it's my research that I'm sharing with you for educational purposes. I hope you have found some of it valuable, and maybe you only found a couple nuggets that you thought were interesting. But this is not financial advice. You should be doing your own research before making any investing decisions, and that's why I make these investing tools over at dividenddata.com. I try and provide resources for you guys. I built everything I want to properly research a business, and I'd make that available for you guys. So if you found that interesting and you want to use dividenddata.com, the link is in the description and pinned comment in the video. And we have an early access sale so you can lock in a discounted price to our spreadsheet tool. I'm really excited about it. I have a ton of other projects I'm working on too. Guys, the future is going to get very interesting. I'm excited. More videos are on the way, so leave a like, comment, and subscribe to the channel for future updates. Thanks for watching, and I'll see you in the next one.